Welcome back to another Stock Market Open live stream. Well, we've got some good old drama going on. The biggest surprise to us this weekend was definitely not Iowa. I don't know that was really a surprise to anyone. The biggest surprise to us was what's going on in the Red Sea, frankly. Red Sea, not that great, if anything, worsening, which is really sad. Kind of the opposite of what was anticipated. Excuse me, especially since the U.S. military and apparently, Operation Prosperity Garden is supposed to be giving us a prosperity garden. Yet, apparently, that's not what's happening. So, I don't know. It does seem to me that you've got unfortunately a lot more aggression in the Red Sea than the United States bargained for or anticipated, to the point where even after these strikes are occurring, now you've got ships this weekend being attacked with damage to their cargo holds, and Royal Dutch Shell dipping out of transiting through the Red Sea. This is a massive disruption, and unfortunately, the longer it lasts, the more inflationary it is. The concern, or initially when this occurred, was that, okay, well, look, this is a problem, but it'll fade. The United States will come and respond. They'll come essentially escort ships through the region, and the risk for some kind of inflationary impetus might go away. Well, unfortunately, that has not occurred. Despite the United States' presence and despite Operation Prosperity Garden, we're still getting attacks on ships that now, like I said, have led other companies to stop shipping once again. Maersk's got paused again. You've got the Royal Dutch Shell pausing again. You're almost at $80 a barrel for Brent, which kind of understates how bad this really is, because frankly, this little rise that we've had here on Brent is nominal compared to how bad this is, mostly because of the rapid slowdown that we're seeing in the Chinese economy. And so, if it weren't for a global slowdown and a Chinese slowdown economically, oil would probably be over $90 a barrel. That's at least in our guess. How do you put it? Well, you put it at a big problem that you think would be solved, but it's not. So now we just have to sort of look at the reality that freight costs may be substantially delayed by the tune of freight costs will be higher, somewhere around double through the Red Sea. But otherwise, if you want to take your boat, so to speak, and ship your product across the Cape of Africa, I guess it's just going to take you an extra couple weeks. And the unfortunate reality of that is somebody's going to have to pay for that. The freight companies raise their price, so usually what happens is companies will have to pay that difference. Will it be consumer price inflationary? Not necessarily. Consumer prices are going to be driven by a company's ability to actually raise prices. But if a company doesn't have the ability to raise prices and their costs go up, they, as I like to say, take it in the margin. So we'll have to pay attention to that. Now, I would have thought that, speaking of a company taking it in the margin, Tesla is exposed to the Red Sea drama. That's why Giga Berlin is shutting down at the end of the month for 2 weeks as they wait for rediverted supply chains to sort of catch up. But anyway, with the Elon Musk board compensation drama that was, sort of blowing up this weekend, I would have expected Tesla to be down more than 1.6%. But anyway, the stock's down 1.6%. It actually tried to recover from its drop when the pre-market opened, so you can see that the market isn't as worried about this talk about Elon Musk's 25% control and sandbagging artificial intelligence growth unless he has 25% control. Market doesn't seem to care that much, or maybe the market's just gotten really used to Elon just saying things that he doesn't really mean. Who knows? But anyway, Apple's also down about 1.6%. So, if you're looking at it to compare to Apple, the beta there is 0. If you're comparing to the NASDAQ, you're at a more appropriate comparison, given that the NASDAQ is down about 45 basis points this morning. So taking a peek at what's moving positive or negative here. Let's go pre-market, post-market. Here we go. All right, so we've got, there's Spirit Aerosystems, provider of those Boeing door plugs that accidentally had some bolts missing there. Let's see how their stock has been performing just over the last few days. Well, looks like since the incident, at least. Yeah, over the last 10 days, they've probably, I mean, they've gone down maybe from about, what, 32 to 26-ish here. $6. Yeah, we call it a good 20%. So we'll hop into Boeing, see how they've moved after this incident. Oh yeah, Boeing's given up quite a bit as well. It's also knocking on the door of 20% at Boeing. But then again, a lot of companies have dropped since the beginning of the year. You can see Tesla here is now testing its 220 Fibby. Well, let's see if we can get a full candlestick under it today. Yeah, we'll probably get a full candlestick under the 220 today, which is not great. The lack of any kind of support under 220 is very depressing. But anyway, so let's find out what else. Let's see here. Yields up a bit, so you've got the interest rate sensitive hoarding. Well, that's another contributor to Tesla there, which would mean that maybe that move in Elon's comp talk isn't hitting the stock as much as the move in the 10-year, which is up to 5.7. We're up 7 basis points. The 2-year up 5.4 basis points. So the spread roughly the same, which is interesting. You know, if you look at the 10-2, the spread between the two is sitting at around, what, negative 20, I believe, was the last we were now. Probably negative 19. Oh, yeah, negative 18.6. But it's that vast steepening suddenly of the yield curve that has really hit markets with a little bit of a surprise. And most of that steepening, you know, relatively to the last few months, didn't occur during the happy time of the market. Remember, I always like to say that when the yield curve is steepening, it's very difficult for stocks to perform well. The reality is that the last time we had the yield curve steepen as much as this, we were sitting in a 3-month bear market, and that was painful for folks. That was a 3-month bear market from about July 19th to October 31st, right there when we ended the house hack Reg A. And, you know, the market started rallying in November, right around November 1st. And what's remarkable is if you look at the yield curve and the yield curve's behavior, you could almost align the pain and the return to excitement, which is somewhat wild to think about. But anyway, ready for this? Look at this. Right here, go to right here. What's this? July 19th. Okay, do you want to see what 3 months of hell feels like in the stock market? Well, 3 months of hell was really about July 19th to, let's find out where November 1st, October 31st is. Wow, what a surprise. Look at that. That's 3 months of stock market hell right there. And then where was the market green? Well, let's take a little arrow here and let's turn it green. It should be relatively obvious. But anyway, let's drop this right here. This is when the market started turning green to roughly what I would say maybe the last 2 days of the month, which would be right there. That's December 28th. Look at that. How wild is that? And then since when has the market been red? There you go. So yeah, you know, that's the glory. So that's the beauty of the 10-2 yield curve. And the 10-2 yield curve is really good at showing you when markets are going to sell off, or when they are selling off, really. I don't know that it's predictive rather than the market is reactive to what's going on in the yield curve. But there you have it. So that's something pretty important to pay attention to. What are they saying over here? Hold on a sec. Yes, second Trump. Okay, this is just an update on the Trump defamation case. Do they really have to stand outside a Trump Tower to bring that update? Anyway, So that yield curve pretty dang powerful. Let's see if anything's moving up. Zim is moving up. Yeah, not a surprise with the disaster this weekend. Not a surprise at all. This weekend, with the biggest news to me this weekend was what's going on with the Red Sea, and it's devastating. So, oh well. It's probably just going to be inflation for longer from the Red Sea. That's kind of weird. Instead of higher for longer, it's going to be rockets for longer. That's disappointing. So Nordic American transport's up. Nvidia's up, which is just remarkable that this stock can just somehow always manage to clutch on to positiveness here, especially going into earnings for Nvidia next month. Pretty remarkable. So let's get the exact date on some of these earnings coming up. The obviously earnings season begins in earnest like now, so that's going to lead to let's see what we got over here. How AI could change healthcare. Okay, oh, I don't care. That's going to lead to a lot of nervousness as well in markets. So that could be part of the contributor of why we're seeing the yield curve move the way it is. Tesla's earnings are coming out on the 24th, so you've got about 8 days to go for that. Let's get into Nvidia earnings are not out until February 21st. And then, of course, we've got some good old earnings starting this week. We start with Goldman Sachs, Morgan Stanley. Let's see here. Let me get this fixed so we can do this correctly. There we go. All right. PNC. Then we get into Interactive Brokers. That's all this week. Schwab. I think Friday is when we get our JP Morgan dump. I want to see that. Let's see here. Okay, come on. Where's this darn thing? Where's JP Morgan? All right, well, we'll figure it out. Hold on a sec. When JP Morgan is usually my big tell of the beginning. No, JP Morgan already posted. Oh, duh. Oh, this is what happens. Yeah, JP Morgan was last Friday. That's right. Yeah, oh, wow. And I remember going through it, too. Sorry, that's just like a dumb moment here in the morning. Duh, Kevin. It's already the 16th. Holy smokes. That's crazy. I even read Jamie Dimon's letter, and I just didn't make the connection. Duh. My bad. So anyway, yeah, so earnings season has started. But anyway, that's wild. Wow, that was a little oopsies. So, but that's kind of exciting because now we get into, once we get through the banks, we really get into the tech earnings. Yeah, this weekend, by the way, was wild. I spent 3 days straight just working on getting one project done. I'm so grateful that it's essentially done. It's like 99% done. I just have to hand it to somebody else, and we get to wrap it up. But yeah, wow, it was a wild weekend of getting that done. But what's nice now is I could focus on just covering the news again this week. So you'll see a lot more activity on eHack and the channel for news coverage. Although I did enjoy posting the interviews, and I've got a few more interviews to post. Goldman did release its earnings. We've got their earnings came out just about let's see, a little over an hour ago. And the Goldman earnings are, they beat on net rev, 11.32 versus 10.84. We've got trading rev missing, not a surprise. Investment banking missing. Total deposits up 6.2% on the quarter over quarter. Also not a surprise. All the deposits are just consolidating amongst the bigger banks now. I'd still hate to be a smaller bank after the banking crisis. People think a second wave of the banking crisis will come. Net interest income came in at 134. It's interesting. It's lower than you would have expected at 1.73. Earnings per share for Q4 rather came in at 548. I wonder what that means they're selling for. Let's see here. Goldman Sachs 377.75. I guess I'll have to look at their annual. So they're going to be at what, 20? That sounds a little expensive. Hold on a second. Let's look at the financials here. So what is Goldman Sachs annual EPS? Let's see here. Expected to be, yeah, okay, that's what I thought. I was just going to multiply it and think like low 20s. 23 this year. Next year expected to be 34. So big growth expected in that, on the bottom line there. But if I go with 377 as the stock price divided by 23.26 for the year, puts me about 16 times. 16 times for the bank. If we get out to next year, you're only trading for 11 times if you go with a forward to next year. Interesting. So, David Solomon calls 2023 the year of execution. Okay. Let's see here. Morgan Stanley. Let's take a look at this. Morgan Stanley. Okay. Okay, that's funny. I go to the Morgan Stanley update and I get another goal. Oh, well, they're doing Goldman combined with this. Okay, Goldman just posted its worst full-year cost as a share of revenue in a long time. The bank spent 75 cents for every dollar of revenue it earned in 2023. Its cost-to-income ratio in 2022 was just 66%. Bank investors are keeping a sharp eye on inflationary pressures. Yeah, no kidding. Let's see if there's any juice in this. Let's see here. Okay. Yeah, I think this is the year of profits we're waiting for. That is trying to maximize profits, and I think that'll also lead to layoffs. Unfortunately. Okay, Morgan Stanley beat on net rev. Wealth management beat at Morgan Stanley. Both well above expectations. EPS was 85 cents at Morgan Stanley. Trading also missed. Yeah, the wealth management beats. Okay, what else? Trying to see if there's anything like scary. It doesn't seem like there really is. I mean, the fact that trading misses and the other numbers come in strong but costs are higher, none of this seems like a big deal. We've got, this was a quarter for Goldman and Morgan Stanley that was characterized by small incremental changes. Growth was single digits in many, if not most areas. Hard to get excited about anything. Results broadly in line with expectations. Underline the stability of the two institutions. Yeah. Nothing too exciting there. Okay. Well, very good. So, in other news, we've got bank earnings will do little to support recent rally. Well, yeah, I don't think the bank earnings are, I mean, even the last one. I mean, JPM was, in my opinion, so unremarkable. I totally even forgot it happened. The earnings, there was nothing exciting in them, either to the negative or to the positive. It was just sort of like, yeah, all right. So we did just get the New York Factory Index. It's known as Empire Manufacturing, and it just dropped to its lowest level since May of 2020. Came in, wow, how do you miss that badly? We were expecting on the survey a -5 read on Empire Manufacturing. The prior read was -14, and is that even right? The current survey comes in at -43. Nope, yep. Yeah, oh, yep, that's pretty bad. Okay, let me show this to you. I think the Fed needs to start waking up here soon, otherwise we're going to end up in a little bit of a poopy-doopy situation. But look at this. This is the Empire Manufacturing chart right here on screen. And it shows you the difference between the current expected and U.S. Sort of recession. It charts all three of these. And so these have to do with manufacturing, a manufacturing survey that's conducted. These data points were collected between January 3rd and January 10th. And they do also use seasonal factors in this. But we had a sharp drop here with the headline General Business Conditions Index falling 29 points down to 43.7, the lowest read since May of 2020. New order shipments also posted sharp declines, with unfilled orders continuing to shrink significantly. Delivery times continued to shorten, inventories edged lower, employment and average work week declined modestly. The pace of input price increase picked up somewhat, while the pace of selling increases was a little changed. So notice that the input price increase picked up somewhat. That's a way of saying the cost pressures on manufacturers have risen a bit, but not only have the cost pressures on manufacturing risen a little bit, they're not able to pass on potentially those costs to consumers. While firms can expect conditions to improve over the next 6 months, conditions remained subdued. Yeah, I'd say that's pretty rough. That's a pretty rough read right there. To get such a negative, negative 43.7 there. That we have not seen outside of COVID. We have not seen a number that negative, since March of 2009. That's gross. So not ideal at all. If we look at the actual full survey here, let's take a look at the full survey. Let's see here. Okay. So a lot of this we read out. Okay. Modest decrease in employment. Prices paid index climbed, signaling a small increase in input prices. Manufacturing continued to sink. Yeah, see, here's a better chart to look at just to show you the magnitude of this. I think this is a really good way to exemplify how wild that is. Business conditions. Yeah, I mean, we're, quite frankly, in a lot of these, the lowest since certainly recessionary times. Prices paid, prices received. Yeah, prices received down, prices paid up. Not a surprise. Number of employees. I wish the charts here in the PDF would go back further than 2019, but because they're a little more spread out like this, you could see it a little bit more clearly. That's why they needed the whole page to spread this all the way out back to 2006. But I mean, if you just look at the diffusion index itself, get rid of COVID, and we're dramatically low here on this chart. Yikes. All right, let's listen in here for a moment. What do they got? Chevron CEO? Yeah, let's see if they talk Red Sea at all. Boy, they look cold.
Since 2022, and it's because of the policies that are happening there. What's the problem? What's the outlook for California?
Well, California was one of the biggest energy-producing states in the country for many, many years. Our company was founded there. We made the first commercial discovery in Pico Canyon in 1879. We've been there for 145 years. We've been part of the economic growth and success of the state. The regulatory and policy agenda has become increasingly aggressive and hostile to our industry. Raised the cost, made it more difficult to do business there, and we are investing less. And as we've looked at our future plans and will invest even less going forward, we are taking an impairment on the value of some of our assets in the state because we simply won't be able to produce the value out of those assets that we had planned to. It's gotten too difficult, and the opportunities for investment elsewhere in our portfolio have become more attractive.
What specifically? I mean, a lot of this is Gavin Newsom as governor. What specifically regulations have made you look at it and say, forget it, it's not worth investing in?
Yeah, I wouldn't put this all on the current administration. This has been underway for a couple of decades, and there's a whole series of things that have made it more difficult to develop energy resources in the state of California. It's permitting issues, it's setback issues. There are a whole series of constraints that I think many in the California policy world would say are intended to constrain and ultimately shut off production in the state as the state tries to pursue a less carbon-intensive economy. The reality is California drivers are still using gasoline, and will be for a long, long time to come. That supply will come from other places than the state of California.
And if they're using EVs, you need the Chevron natural gas to power the grid that charges the EVs anyway. You're going to get it either way, Mike.
All right, we're going to pull off this. So let's look at some other catalysts that we've got coming up. We've got, so the Empire Manufacturing Report, yeah, it's bad. I'm not really happy about seeing that one. We are going to pay attention to this. However, let's also look at what else we've got in some of these reporting. We've got Canada housing starts coming in as expected, right around, well, pretty close, around 249,000. You've got CPI, expectation was 250. CPI coming in, non-seasonally adjusted. Why do they use non-seasonally adjusted? Anyway, month over month, negative 0.3. They were expecting negative 0.3, year over year, 3.4. So right on with expectations for Canada. Let's see, United Kingdom. You've got payrolled employees monthly change, negative 24,000. It's starting versus the expectation of negative 13,000. So a little bit of an uptick there in job losses for the United Kingdom. I like to sometimes see what the larger companies are doing. Germany's inflation comes in with 0.1% on the month over month as expected, 3.7 year over year as expected. Actually, all the numbers literally as expected. Harmonized month over month at 0.2 versus 0.2 expected, and year over year 3.8 year over year as expected. PPI tomorrow for Germany. Actually, no, that's in 3 days. It's not tomorrow. I thought it might be the next day. It's not. So as far as United States catalysts, Jerome Powell coming up is going to be a big one. I think we've got a beige book coming in here as well. Let's see what the status is on the next beige book. Fed. Next beige book from the Fed comes out tomorrow. Ooh, that's going to be fun. That should give us a lot more detail on what the Empire Manufacturing Survey is seeing. That is, it's going to really be an opportunity for us to just see the Fed's latest data in each region, whether it's Boston or wherever it might be, Philadelphia, the San Francisco area. And so we'll get sort of a culmination of what expectations are in different markets. And if you get a really weak beige book reading, I would expect that your rate monitor will start increasing the odds for a rate cut in March. Right now, the odds of a rate cut in March sit about 73.2%. So we're still a good chunk, more than half of the market participants expecting a rate cut as soon as March, which is very interesting because that is clearly a very debated topic right now. Okay, so what else? So then we have, let's see how the pre-market move. Pre-market, DWAC after winning Iowa actually moving up. Look at that. Somebody here in the comments says, Vivek supporting Trump now. I don't think he ever was not. Desmond says the Kevin and Lauren podcast, that's Lauren Southern, was great. Thank you for that. Yeah, that was a fun podcast. A lot of emotion involved. Very good. Let's see here. Yeah, we need to kick Gavin's butt. Gavin causing too many problems. Yeah, it's sad. Yeah, no, I don't really have any thoughts on Vivek dropping out. I mean, it's kind of the time to do it, right? Like you're not gonna get invited to the debates anymore. You're not gonna get involved in you kind of almost, you have to take kind of your poll at that point and then go, you know what, we did good for coming out of nowhere, and we'll be back in the future. Kind of leave while you're as high as possible, right? And then leverage that towards something in the future, which probably is, trying to get a cabinet position with Trump, very likely, in fact. So to me, it's not horrible. This is the time to do that. I mean, frankly, I feel like you need like one other Republican still in it as sort of like your backup, right? And so then the people are like, okay, well, who should that be? Because nobody can agree on a backup. So then it's kind of also sort of like, okay, well, then do you drop out or do you come back if Trump isn't in or something? Who knows, right? But my base case is that you can't have Trump not on the ballot and not run, mostly because we'll end up with some kind of civil war, which would be pretty bad. But that's that's just an opinion. So to be very clear about that. So okay, yeah. Now the suits are talking about this plummet in manufacturing. I want to see if this manufacturing plummet has made any kind of caused any kind of shift here in stocks. Not really. Yeah, Apple's getting hit too here. Enphase. Yep. Nope. Okay, let's jump into Qs. QQQs. So what do we got here? We've got the Qs at negative 46. So no big movement here after the Empire survey. And BTC sitting at, BTC has been a wild ride here. Let's look at this. So obviously after the crypto approval, I mean, it was widely expected it was not going to hit a new catalyst. So I'm not surprised at all that we got rejected here. And so we're just resting on the lower fib on Bitcoin right now, and we're sort of bobbing around the bottom here. The question is, what's the next catalyst to really move BTC? And probably it would, in my opinion, be some kind of AUM pull for these Bitcoin ETFs. Now, I did think it was very interesting that of like the allocation numbers that we got last week. So it looked like VanEck was leading. I don't think these are the most up to date here. Oh, it says Friday. No, I think there are more up to date numbers here. But oh yeah, interesting. Okay. Oh yeah. So let me read this correctly. So Grayscale Bitcoin Trust we know has 28 billion. VanEck only saw inflows of about 75 million, apparently, followed by Fidelity Wise of 20 million, and then some pretty nominal inflows here on the other ones. I'm trying to see if I can get the latest update on this because the AUM didn't seem that great. Okay, here's the latest. Bitwise, 242 million. That's better. Grayscale, Bitwise. Okay, well, I'll do a little searching and I'll get the latest numbers here. But it'd be nice to see the latest update. Oh, maybe I could do it a different way. Let me try this. I'm going to try this. ARKB, for example. Let's see if I can get flows. No, I can't yet. Dang it. All right, well, no problem. So, okay, yeah, here we go. What do we have here? Grayscale Bitcoin Trust had outflows of nearly $500 million. That's not a surprise. That's not a surprise at all. People have been wanting to get out of there for a long time. That's why it's been selling at a discount for so long. It's just, anything to get liquidity, basically. And give somebody else the lock-in to hold. It's pretty normal. It was a good ARB when it was selling for a 50% discount. Bitcoin sell the fact came from Binance. Oh, how interesting. Data tracked by this Paris-based firm called Kaiko showed the selling pressure has been concentrated on Binance, the leading crypto exchange. How interesting. Bitcoin, the leading cryptocurrency by market value, changed hands at $42,700 at press time, representing a 12% drop from its high. Price drop seems to have stemmed from traders taking profits on long positions in anticipation of the ETFs. Not a surprise. Binance led the sell the fact. ETFs began trading last Thursday with a strong surge in cumulative volume delta. Let's see here. Darn. I really want to know. I want to know the flows. We'll find it. All right. Let's listen in here for a moment.
Final check. We're almost going to put this one to bed. This first show, we got 2 more to go here in Davos. The futures right now, back down 148. We were down 50. We had recovered. Now we're back down 75 or so on the NASDAQ, S&P. Off 21. Interest rates haven't been the issue today. About 4% now on the 10-year, and Bitcoin's right at about 43,000. Make sure that you join us tomorrow. Might be a little precipitation, or is that And
I think
That's Thursday.
Yeah.
That's Thursday.
Okay, they're so out of things to talk about. It's not even funny. That's okay. So anyway, what else do we have here? So we talked Morgan Stanley, talked a little bit about, JP Morgan just announced they're doing a kicks off $35 billion a week high-grade bond sale. JP Morgan is issuing investment-grade bonds on Tuesday. The lender is offering debt in 4 parts, an 11-year note being pitched at a spread of 150 basis points to 155 over treasuries. That's interesting. Raising money at up to 155 points above treasuries. Interesting. Elon pressures board for more comp. We talked about that. Iran hits... Oh, that's... How interesting is this? Iran attacked what it said was an Israeli spy base in Iraq with missiles, the first direct strike on an Israeli interest since the start of the war in Gaza. Wow. Iran calling it the destruction of the espionage headquarters of Israel's Mossad intelligence service in the Iraqi Kurdistan on late Monday. Oof, it's a tinderbox over there. You know, I don't understand how there's been such a loss of control in the Middle East. Oh wait, maybe there are a few things that could have pointed this out to what's happening. We won't speculate. But anyway, pretty shocking. Yeah. All right. What's Jimbo got to say?
People want this group out.
Because
Because I think the group moved a lot. And because I also think that somehow there's a belief that it can't get better than this. I disagree with that entirely. I think investment bank's going to be really good. I think it would defer to David. But I think you could have a huge year of M&A. But people just said this group came in too hot. Morgan Stanley was at 70. It went all the way up to 92. It's just sell, sell, sell. Wells, I thought, had a good quarter. Doesn't matter, David. This group was set to sell, and they're selling it.
I feel like it seems so rare that the group actually really does perform well after earnings. I mean, I know we say
I couldn't
that,
find a
but
time. I couldn't find a time. It's a very good
feels
call.
like a great consistency to basically not expect, certainly don't own these going into earnings.
If they ran, you're so right.
Yeah, somebody here I think really points it out. Can't wait to retire in 50 years. Yeah, that is kind of what the market feels like, eh? I mean, it feels like it's been like, what, 3 years of just like, can we say 3 years? Probably be, well, end of 21. More like 2. It's coming up on like 2 and a bit, right? But it feels like it's been 2 and a bit years of just like insane insanityness. Yeah, there's a new word. But anyway, oil prices, let's see. Houthi missiles at the Greek ship, talked about that. There wasn't, outside of politics, there wasn't a lot of news this weekend in the finance space. Obviously, we know Trump's absolute shellacking in Iowa, which wasn't a terrible surprise. Did you know Iowa only has a population of like 3 million? Like, you could fit Iowa's population inside of Los Angeles, and population-wise, and it's surprising how powerful these counties are. But what's also really kind of remarkable is when you look at the votes in the various counties, you're literally talking about like tens, hundreds of votes. Like, the power of Iowa for how few votes there are is insane. There's a reason they talk about grassroots. Like, understand this. Look at this. When you zoom in over here, or let's get rid of the weird video playing there. When you zoom in right here, look at some of these votes. So right here, 95% of the vote in, Trump gets 132 votes. Right here, look at that. 1,500, 337, 964. And you kind of keep looking. I mean, there's a 188 over here. And you sort of keep going around. You're like, wow, Trump got 293. Here, I'll hide myself there. 293 votes over here. So it's kind of remarkable how small some of these areas are. Look at this one. Nikki Haley gets 16 votes. and got 7% of the vote with 16. 34 votes gets 10% of the vote. Donald Trump gets 59%. Like, the fact that Iowa has so much like prominence is wild. And look at it. And it hasn't even really been that great at predicting the Republican nominee. I mean, in the last 15 years, it's been wrong, like, probably more like 20 years. It's been wrong 3 times. And there haven't been that many elections in the last 20 years, right? So anyway, look at this. I mean, the whole Iowa thing, you're talking 56,000 votes. It's wild how relatively small Iowa is. But it's that grassroots momentum that people deem to get from Iowa that makes Iowa so traditionally powerful, even though its predictive capabilities have really gone a little poopsie doops. So it's just a sign of early voting, and people like to leverage early voting as well, I guess it would be more like early polling would be a better way to put it. It is voting, obviously, but it's almost like more like people polling with their actual votes. That's confusing. But anyway, looking at some of the latest numbers outside of Iowa, CBS has Trump with a 2-point lead. You've got Haley versus Biden. This blew my mind. Haley versus Biden, 8-point lead for Haley. Wow, that's crazy. And so some of these national polls have been pretty wild. Although, you know, polls are polls, so you have to kind of take them with a grain of salt. That was certainly some of the biggest news this weekend. Yeah. So, yeah, we can blame weather all we want. Let's be real. Like, the Iowa poll numbers are always pretty small relative to what you would expect with how powerful it is. Okay, so let's see here. Let's see here. Inside a plan. No. Boy, that is shocking. Somewhat boring today. Apple goes on the offensive as iPhone sales slip in biggest overseas market. Okay, let's see what's going on. Apple is offering rare discounts in China, including on its latest iPhones, in a bid to take back growing competition in the higher-end market. Tech giant is running a promotion from Thursday to Sunday in China in which it's cutting the price of its iPhones by up to $70. Products will be discounted by up to $110 for other products. Promotion comes ahead of the Lunar New Year holiday beginning February 10th, a customary gift-giving season in China. Yep. Slowing down economy for you. Everyone's sucking. Like Burberry. Let's see here. Interesting. Burberry warned Friday that underlying operating profit in its current fiscal year could be about $127 million lower after a disappointing Christmas. Shares are down almost 50% over the last year, with the market value falling to 4.4 billion pounds. Burberry has also been hit particularly hard by a high-end downturn. Its effort to shift from a premium brand to one of true luxury are being derailed by well-heeled consumers cutting back. Yeah, wow. Everybody cutting back. How interesting. Luxury shoppers cutting back as well. But then again, you wonder, like, how necessary is the Burberry spending really? I don't know. You know, it's funny. I remember, I used to go into Hugo Boss and I'd ask them how their sales are doing and how the economy's doing. And it was so weird, the lag. It took for them to actually start complaining. I'll tell you. So it wasn't early 2022 when I was complaining about the market. The lag was wild. I want to go. I know exactly which interview it was. It was the Barbara Corcoran. I just have to find it really quick. Okay, fine. Anyway, when I did my Barbara Corcoran interview, I went into the Hugo Boss That's why, oh, how are sales doing now? Because I always go to the same one in New York City. And they almost know me over there now. And guys like, oh, last time you were here is great. But, oh, man, all of a sudden, it's really slowed down. That was June 3rd of 2023. That's wild. So that must be the same kind of pain Burberry started feeling there. Sort of the street research, if you will. It's just weird how long it just kind of kept going, The fact that it took 18 months from January of 2022 to really the summer of 2023 for stores to really start seeing the kind of pain. So, weird little lag, I suppose. Or maybe totally normal. Who knows? So, okay, we talked about the New York manufacturing piece. Here's a pessimist's guide to global economic risks in 2024. First, Middle East on the brink. Yes. Fed could get burned again. Well, if inflation reignites. Yes. Europe going negative. Yes. And China wobbling the global economy down. Japan's yield curve control is failing. What's ever going to happen in Ukraine? Nobody knows. The elections in Taiwan. We do have the elections in Taiwan. That's fair. We can touch on that. The anti-China party basically won. Oil. Man, this is a long list. Still, even the base case isn't great. Man, it sucks to invest these days. Like, everything that could go wrong feels like it is going wrong. But hey, at least there are U.S. warships going to the Red Sea to help. Oh, wait.
You're well aware of. The Gina Raimondo is very involved in.
I know. The new Taiwan election that went not the Chinese way.
That's right.
And yet the Chinese, they want to issue some $1 trillion bond, and yet we know, well, it's actually not that much, but we know that from Eunice Yu that the amount of empty cities, ghost towns.
There are ghost towns. They have a real property issue.
Do they have like tumbleweeds?
Deflation is going to be very significant. They've got some demographic issues as well. We don't even get a youth unemployment number any longer because we know how high that number may be.
Yeah.
Belton Road
all that
pulling back.
said, they still can export a lot of stuff. I mean, talk to the Europeans right now about EVs,
Right.
which are becoming higher quality and are being dominated
That's
by
a
the
very
Chinese.
good point. And they now have
Are we going to keep them out of this market? If they can
either
$28,000 EVs, you're not going to be able to buy them here.
Either
But you know
president
what? Some
gonna
people
keep
might
them out.
say, well, come on, it solves the inflation problems.
It's a good point. Good point. The inflation problem is being solved by the plummeting stock of Apple.
Yeah, I think the headline of the Journal is wary world watches as prices fall. We talked about CPI on Friday, 3 straight months, worst since the Asian financial crisis.
Gotta
Jim,
change the narrative.
Chinese stocks relative to the S&P are the cheapest in almost a decade and a half.
I know, but you come in and Baidu's down big. I don't know about Baba versus Japan, where
Baba hasn't been this low.
Japan's back to
Baba's below its IPO
1990.
price. Yeah.
Japan's back to when it was bigger than us,
Japan is, had a real renaissance.
and we don't talk about it at all.
No,
it
we
just
don't talk about it
happens.
too often.
Nope. What is that about? That we don't talk about the renaissance of Japan? I mean, it's been the best market of all, and no one's even talking about like Toyota. They talk about Tesla, but not Toyota.
That's a good point. That's a good point. There are still a lot of formidable Japanese companies.
There are,
Yes.
and yet we act as if they got left behind.
Well, I mean, their
Hardly.
market cap combined still doesn't equal Microsoft.
Who
so.
bought Letter X? No, I don't mean Twitter, by the way. Who bought U.S.
Yes,
Steel?
a Japanese company
Just
is
wrote a
in a
check.
deal to
But we
acquire.
don't even think anything of that.
Why should we?
Well, because they had the money.
They did have the
They
money.
had the money.
They had the most money.
They had the.
Yes. It's not just the money. Cleveland
Yeah.
Cliffs had the money too. They had the
That's
most.
true. Morgan Stanley down 3. How about taking it down 6? Why don't you just do that, you bunch of clowns? Just take it down, you
are.
fatuous individuals.
Are you directing your hostility at the
He sounds like what I think he like when he mimics haters on Twitter. You clowns.
At the viewers.
Absolutely. Because these people are, I mean, I got to tell you.
Not our viewers. You're talking, when you saw, I want to make it clear here. He loves his viewers. He's talking about the people who are selling Morgan Stanley.
Mo's selling
being
it down
clowns
4.
and morons.
And Curly's got it down 5. And that's just Shemp's chance to buy it down 6. Go ahead, Shemp. Take over. And then, by the way, Goldman, I'll pay down 4. Soupy.
Got it right. Bang.
Take a look at the pre-market here. We're going to get to a lot more.
It's kind of funny, honestly. Anyway, okay, all right. So, all right, Morgan Stanley 2.62, Boeing's down 3. Well, I mean, everything's red except for freaking Costco. Coinbase, short Coinbase, duh, down 1%. We'll see how long that short can ride. That'll offset the Costco. But anyway, Zim, yeah, boy. I mean, not a shocker with just the. You know what? You could have gone long on Zim by betting that the United States would somehow fail in the Red Sea. That would be like betting on incompetence or some kind of bad leadership or something. Well, shucks. This here is Operation Prosperity Garden arriving. Okay, this is like if you chart out, hey, look, the American warships are here. Operation Prosperity Garden, yay! And then so it's like expectation would be a plummet, right? Reality. Oh my God. Yeah. Oh, that's unfortunate. So anyway, there's Nvidia. Okay, all right. It's just insane. The Nvidia movement. I actually do think Nvidia's still. I mean, you're gonna get to the point where like it's not worth it anymore. But to me, I can't. I don't touch the sell button on Nvidia probably until it's well into the 600s. So we knew that breaking 500 was a pretty big catalyst. And so it's not a surprise that it's moved to these levels. The question is now you're really in uncharted territory. So like as a trader, I'd be a little bit more nervous. You gotta, let's see if you can hold that. I mean, this is just a silly little triple touch. I wonder if we can get back any further. Ooh, I don't think I can play that. Ooh, no, not super easy. Sometimes we can play longer term trends here. Nah, I'm not going to play with that one. Yeah, I feel a little lonely up here without any kind of TA. I mean, we could redraw some fibs, but I don't think that's a good idea. And these have just been too strong. So, this would almost, I feel like you almost set your sell right here at like 693. Before you get to the 731, you set it at 693. And if it pops that high, you're just like, thanks, man. I'm taking the tendies. Appreciate it. Bye. So, yeah, the TA on Nvidia is fascinating. But I think they're also going to be the ones that really show profit now for a while. Here's DWAC. Boy, I still can't remember talking to Sean Spicer. Sean, sell it. And he's like, what do you mean? I'm like, it's going back to $10. That was like back when this sucker was somewhere around 80, 90 bucks or something like that. I wonder if it's still possible to find that. Pretty sure I had green hair a long time ago. Sean Spicer, meet Kevin, DWAC. I don't have to find it. But anyway, I don't know if I put DWAC in the title. Anyway, that was pretty wild. We don't have to go back and find it now. Y'all probably remember anyway. But it was funny. That was back. I think that was back. That was not long after I ran for governor in Cali. And mostly, that was probably like 3 months afterwards. Mostly because all of the Republican news stations loved having me on because I was running against Gavin Newsom. And they're like, he's going to beat Gavin Newsom or whatever. That was at least the lead story that they loved. Anyway.
Pressures in the House as well. Emily Wilkins today. Jim, back in 17, news like this would change the curve of EPS forecasts.
Absolutely. Speaking of clowns, I mean, do they have any idea how profitable American business is? I mean, there's so many parts of the country we have two countries, we have rich and poor, but they do something that is this silly, but, they want it bipartisan. I'm embarrassed by our country. I mean, the tax breaks to business is making so much money.
So you don't agree with these tax
No,
breaks?
of course not.
You don't?
No.
Even for R&D? Really?
What?
You don't want to,
No,
so
they
that
don't.
we
They
can-
have so much.
Walt Disney, Disney's announcing that I guess Disney Plus subscribers will be able to stream their entire catalog on Apple Vision Pro.
But business getting tax breaks. Business is doing so well. We all should be in business. But they do that because they want to show that they passed something and they're not a bunch of knuckleheads. But they are so out of touch with the real world, it's really frightening. It really is. Business is doing the best I can recall in a long time.
All the way through a tightening cycle, which has been the surprising
They
part.
should have been crushed by a tightening. Name me a business that's doing poorly. Like ChargePoint? I mean, honestly, every business that
Owners of office commercial real estate.
Okay, this $78 billion deal, this is tax benefits for businesses and low-income families. It would temporarily expand the child tax credit. Oh, that's great. A lot of people have been waiting for that. Boost the low-income housing tax credit while bringing back a range of deductions for companies. The deal, which includes disaster relief, likely extend tax benefits for TSM in the United States. That's not really a small business. Deal still has to pass, obviously, both chambers. Let me see where this is from. I think I can find it. Yeah, here we go. Okie dokie dokie dokie. Yeah, here it is. Breaking, negotiators have a $78 billion deal. Found the source. Question is now whether Ron Wyden and Jason Smith can build enough support to get their deals through both chambers, right? Details. Bring back the full upfront deductions for domestic research and development costs, along with bigger deductions for business interest expenses on purchases of machinery through 2025. Trying to prop up the capital expenditures market. It's also expected to increase immediate deductions that smaller businesses can take buying equipment and machinery, raising the threshold to $1,000 for sending tax forms for payments to certain non-employees, and raising that. Okay, so it looks like they might also be bumping the $600 to $1,000 for that payment threshold with the IRS, like the Venmo tax or whatever. Child tax credit would raise the maximum child tax credit to $2,000 for families who owe less than that in taxes. Would also allow low-income families with multiple children to phase in eligibility for more benefits faster. Tying some of this to inflation. Low-income housing tax credit for developers gets expanded. Obviously, this all has to pass, but these are the plans right now. And then tax benefits for TSM. Interesting. We'll see how that develops. That's all some of the latest from this morning. All right. So that's a $78 billion deal. I will break that out in detail and explain some of those subsections a little bit more. I'll throw that on eHack. I'll probably do that after the course live, just because I think that's quite interesting. So we'll break that down in detail. Next thing we've got to do is, let's see here. What is this? Animal spirits. Let's see here. Reason markets actually here. Yes, interesting. So the suits are saying, yes, the market is expecting higher likelihood of rate cuts, but the market's expecting that because of a disaster in financial numbers. See, for example, the Empire Manufacturing Report, which should be a risk factor for stocks, which is also true. So, okay. We are now 6 minutes away from the bell. ECB cut very probable in 2024. Yeah, we know that. Kim Jong-un wants peaceful reunification. Okay. All right, let's see how yields are doing this morning. Okay, so we have, wow, the 10-year's up 6.2 basis points. The 2-year is up 5. So, ooh, interesting. That's a little bit, I mean, you're normalizing the yield curve a little bit here now. You're looking at, yeah, you're less than an 18 basis point spread now from basically having a re-inverted yield curve, or an uninverted yield curve, I guess would be the way to put it. Re-inverted would mean inverting again, so uninverted would be better. And, ooh, interesting. International Monetary Fund estimates that the U.S. economy has already seen about 75% of the transmission of monetary policy. Basically trying to say, like, it ain't lagging anymore. It's starting to bite. Yeah. Well, and I think that's why markets are pricing in these rate cuts so heavily. I mean, you look at the rate cuts that we've got priced in for the end of this year, and it could end up being worse. I mean, it's just going to be a poop. This year, it's just going to be a poop show. It's either everybody's going bankrupt or everybody's retiring. I don't know how much of an in-between there is if you're a long investor, right? And then, of course, vice versa if you're a short investor. And I don't mean like height short. But anyway, we have a 98% chance of 5 rate cuts right now. Holy smokes. Did I do that math right? 1.3 plus 12.8 plus 36.9 plus 34.2 plus 12.9. Yeah. 98.1% chance of 5 rate cuts. That's fully priced. Okay. So 4 rate cuts sits at 85.2. 3 rate cuts. Oh, sorry. That's 6 rate cuts. Going the wrong way. 6 rate cuts, 85.2. 7 rate cuts. Yeah, 7 rate cuts. Is that right? 4? Yeah. 7 rate cuts at 51%. Coin toss on 7 rate cuts right now, with fully pricing in 5 for December of this year. Wow. Okay. Let's see what that looks like graphically. Oh, yeah. Okay. It's actually an acceleration. Yeah, that's actually a substantial acceleration of rate cuts really between March and September. The market is convinced that you're going to have the fastest rate cuts between March and September, and you'll actually slow down the pace of rate cuts at the end of the year. Now, that's a very interesting chart. Let me pull this up for y'all. Okay, so take a look at this. So this is a rate of change issue here. It's a little hard to tell, so I'm just going to try to explain it really quickly. Oh, come on, Kevin. Grab the arrow here. There we go. Okay, see this right here? This is March. Look at the slope of the curve. See how rapidly negative this is? This is approximately the same slope through June. So in other words, the most aggressive of rate cuts between March and June, and roughly a similar slope, but slightly less steep between June and September, and then a slowdown in the pace of rate cuts into the end of the year. See that slowdown in the slope of the curve there, right? I think an easy way to look at that is if I match this slope right here with this green line, you'll see how much less steep this is compared to the beginning of the year. See that? Well, I'll just drop it right there. Yeah, see that wedge? That wedge is a slowdown in the pace of rate cuts at the end of the year compared to over here. So the market is really trying to front load some of these cuts. So we got the bell coming out, 29 seconds. People get mad at me if I miss the bell, rightfully so. So let's not miss it. I love the bell. It's such an honor. It's such a cool thing. Even when it's all red, it's like it's still like it's the bell, you know.
One of the best CFOs I've ever met. At Walmart. People should go to the Walmart. They won't believe the prices.
All right.
Fantastic. Cameras in every aisle. Great way to deal with the shoplifting. Almost nothing behind plexiglass. Just fun.
Let's get a look at the opening bell here and the CNBC Real-Time Exchange. At the big board, it is Walmart, marking the International CFO Summit at the NASDAQ Israel Securities Authority, the country's securities regulator.
Look at that. We're talking like 85%-ish red. Sweet. To be excited about something that's red, in our course member live streams, we analyzed this company, Jupiter Wellness, while it was meme stalking. And I basically called it a straight up scam. A lot of people decided to go either along with puts or short it. And they've done really well. So every day in our course member live streams, we try to do analysis, fundamental analysis on companies. But this one was just a glaring scam. It's down another 10% today. Like, I have not seen a company that was this much of a scam in a while, in my opinion, right? Don't sue me, bro. Although they probably don't even have money to sue anyway because they suck that badly. But it was pretty remarkable. So, yeah, that's in case you're wondering what that Jupiter ticker symbol is when I sort this by losers. Now you know. Spirit Aerosystems down about 4%. You've got Boeing dropping another 3 right here. Coinbase down another 2. Dropping. I am short coin. Tesla down about 2. Let's see here. Let's take a peek at how Tesla's trying to behave here at the beginning. It's actually kind of barcoding. That's surprising. Yeah, that's Coinbase right there. Trying to recover, actually. Look at that. That's about to turn into a green candlestick right there. Oh, look at that. The Qs are actually going to recover here. Wow. Qs trying to recover. Costco up 25 bips. Apple's trying to recover. Go green a little. Okay. Robbing the hood. The hood got robbed. Down a chunk right now. Tesla drops some more. Forget about barcoding. There's your extra 0.5%. That one's going straight down. Thanks, Elon, for the drama. Could always rely on that. Then you've got, to the upside, DWAC after Iowa, Zim after the Red Sea disaster, NVIDIA up another 1% on excitement. Let's see here, Redfin, 4.7 now. Okay, yeah, these things are moving quickly. Rivian also down 3.8, though. I think Rivian's also pretty much been straight down the beginning of this year. Let's go ahead and pull Rivian here quickly. Rivian, let's go to the day chart. Yeah, so Rivian's really gotten whacked since the beginning of the year. All the autos have been really... Tesla, NIO, yeah, look at them. They've all just been whacked since the beginning of the year here. As soon as you couldn't break 258, we recognized there was a good chance we were going to get to 222. The fact that we're now in no man's land down at 213, not great for Tesla. Tesla, from a valuation point of view, it actually trades cheaper than Apple, and that's something to consider. So you got to look at their EPS expected to come in at about $3, and then you look at about, and that's for this year coming up. So you go about 213 divided by 3, and then we're going to divide that by about 30% EPS growth to get a peg. So divided by about 30 puts you at about a 2.4, 2.3 and a half-ish peg. Jump over to Apple. Apple right now is trading for 185-ish divided by 662, 6.62. Apple trading for about 27.8, but then we're going to look at growth here. Growth for Apple roughly about 9% going forward, so 28 divided by 9 puts you at about a 3.1 peg. So from a peg, from a growth to earnings basis, Apple's actually more expensive than Tesla. And then what's really entertaining is when you look at a company like NVIDIA. Now, they've really started to price in some of these higher EPS numbers. But you probably take a similar 30% EPS growth. I like to use 25 for NVIDIA. So you go, 547 divided by growth this year coming up, well, this January would be about 1232. That's 44.39 divided by 25. NVIDIA is only trading for 1.7 times. So it's kind of crazy to think that Tesla at this price is at about 2.3. Apple's at about 3.1. Nvidia's about 1.77. Kind of wild. Shows you the strength of that Nvidia stock. Pretty impressive. So, good job. Tesla now down almost a full 3%. And wouldn't be surprised for it to be a rough day without any kind of fib support there. And a CEO that's going a little kooky. Then you've got, what else? Microsoft's up. Let's listen in here for a moment, see what we got here.
About 400 million run rate cost synergies, 3 years post-close. We're also talking about 400 million run rate revenue synergies, 4-year post-close. There you see it right there. They're taking on $16 billion in debt to get this deal, the cash portion of it. So they are increasing their indebtedness, their leverage, but they're talking about getting down to as low as 2 times adjusted EBITDA within what's a couple of years post-close. Now, that close itself is going to be a year. They do need China approval, and that may be one reason why you are seeing a fairly significant spread between Ansys's current stock price and what the deal is worth. You did have these 2 cover bids there, though, so we can expect that this...
Oil, by the way, dropped a little bit here. I know they're talking about this deal here, but anyway, oil dropped a little bit off of some of its early morning gains. 10-year Treasury and the 2-year Treasury still pretty stable right now, and of course the indices across the board are mostly negative here. Although it did look like the Qs were trying to recover. Yeah, they actually still are. Look at that. The Q's still recovering here. Really, really incredible. So, let's see. We've got... okay, let me look at the SPY. I want to see how the SPY is doing relative to the Q's. Yeah, the SPY is not doing as well as the Q's here. The SPY lagging a little bit relative to what you've got moving in the tech sector. So what's driving the Qs? Is it MSFT or just Nvidia? Yeah, it's Microsoft. It's just AI basically. Yeah, it's Microsoft and Nvidia. I mean, look at that. Microsoft and Nvidia absolutely crushing it, pulling the Qs right now. Very, very incredible. So pretty impressive move. And it just makes you wonder, when can the AI stop? You know, at the same, it's kind of funny, like the AI stocks are rallying while at the same time the person who wants more money to develop AI is leading the stock to kind of tankly doodla there a little bit. Boeing, 4%. That's a big day for Boeing, for another 4%. Yeah, they're really getting beat up over here. Enphase, 1%, relatively on the nominal side. CrowdStrike, a lot of the cyber sec, actually not horrible here. Look at that. This is CrowdStrike on the week chart right here. CrowdStrike actually phenomenal for really for about the last year. I mean, look at that. You went from about 94 to 288 on CrowdStrike. 288 divided by 94, that's a 3x on CrowdStrike. Holy moly, over 2023. Cloudflare has not had anywhere near that kind of enthusiasm. You're at 77 versus the lows of about 39, so it still had a decent 2023, but certainly much slower of a mover than CrowdStrike. Rivian now down a full 5%. Ouch. Bitcoin dropping again. Look at that. Bitcoin's trying to get down to its fib right there of about 42.2, sitting about 42.3 right now. Apple down a couple percent. And, you know, what kind of sucks is, like, if you launched one of the Bitcoin ETFs right now, they've just been straight down. Now, that's, yeah, I mean, they're just, it's not like any of the ETF managers can really make a difference of it, but it's just, you know, it's a rough start. But, yeah, it's okay. That'll rebound. And it's, you know, it's an underlying commodity, so it's not like it's based on fund manager performance. But, yeah, I mean, it's just very interesting to see all the various different ones. I wish they would show us total assets, but it's still hard to find this. Still having trouble getting that. Okay, let's listen to Jimbo for a second. They're still on this?
That a Broadcom deal can extend that kind of positive nature.
It always is concerning just because of the relationship between our two countries, but there's nothing on the antitrust front that would seem to
absolutely right.
I mean, I think it's 5% of their business in China. By the way, the CEO on the call, Sassine Ghazi, the new CEO of Synopsys, saying the combined companies enhance the ability to invest in AI and cloud solutions.
It's true.
Jim,
I mean, it's
which
not,
underpins everything we do is another
right.
huge benefit to the transaction.
Not a press release.
Oh, here we go. Okay, I think I got it. So, Bitwise had the most inflows on the first day of 238 million, followed by, let's see here, Bitwise took the lead, 238 of inflows, followed by Fidelity at 227, BlackRock at 112. Those were the AUM inflows there. So that was on the first day. Yeah, Fidelity really kicked butt. ARK at about 111 mil. Hashdex 5 mil. It's pretty low. Wisdom Tree 2.4 mil. It's pretty low. Valkyrie 500K. I mean, that's like seed capital. When you create an ETF, like, you usually seed it with 500K. So that's pretty low. Oh well. Oh well. Anyway, wow. Nvidia just keeps kicking here. NEO down now 6.5%. Now you know what we're gonna do in the course member live stream? We're gonna do analysis on NEO today to start with, because now it's just, I mean, you're really a proxy for the Chinese economy to some extent, and they're ADRs. So I always find risks in ADRs. I think they're a little bit less transparent. I mean, and trust me, I'm not here to say that you know, the U.S. stock market isn't to some extent like rigged, but you know, if you think the U.S. market is rigged, there might be a little bit more rigging in the Chinese ADRs. So I always have a little bit of a concern over that. But we'll take a look at that in the course member live stream this morning and do a little bit of an analysis on that. As far as some other, you know, Rivian, as much as I'm surprised they've survived, I will say we're not out of the woods. 2024 is really going to be the year for, well, I mean, if we hit recession, you know, you could end up finding bankruptcies at companies like this. I don't think you'll find bankruptcies at something like a Tesla. Of course, you could see margins get destroyed more than they already have been. But yeah, I mean, if you actually really hit the layoff cycle, then you've got some real poopsie doopsies coming to stocks across the board. So NASDAQ turning a little red here again, trying to give up some of that enthusiasm. Looks like a little bit of a turn down there on Microsoft and Nvidia, dragging it down. And Bitcoin also, yep, now it's back at its fib. Dropped the other $100 there. We needed to get back to fib. And Enphase now down a couple percent. How's the TA on this? Ooh, it's sitting there at a pretty dirty level, sitting right below a fib as well. The last thing we want is to start knocking on the door of that channel again. We really got to stay away from that. So I'd really like to see, you know, closing as close to possible to 113. But yeah, rough week here as we go into earnings. Wow, look at Restoration Hardware. One to pay attention to, I think, if Restoration Hardware keeps selling off. Another one I'm watching is Ulta. I want to see what's going on with Ulta. Ulta, yeah, no sell down yet in Ulta here. And I know Carnival really missed its 1968 by a lot. See, that 1968 level is a big deal. If you could get a breakout at 1968, I think you get a big NVIDIA-style rally at Carnival Cruise Lines. But you're just not close to that. So, full rejection right there on the 1968 level. That's another one that I've been paying attention to. And then there's a firm for a short, but, you know, they've already kind of moved down about a little over about 25% of a sell down already here. So, it's probably just on interest rate sensitivity. Yeah, well, and also, I mean, consumerism. So now we are looking at bonds. Yeah, it's up again, 6.6 basis points on that 10. And then the 2 sitting up about 5.8. So still got a little bit of a steepening there. So very well. Time to push the button and then get to the course member live stream. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than Househack, nor am I presently acting as a market maker. Well, there you have it. Oh, look, Neo's trying to rebound a little bit. All right, folks. Oh, try to survive the bloodbath. And we'll see you soon in the Course Member Live.